Welcome back to the RealEDGE podcast. Joined by Todd Feager, who runs the consumer direct banking for Flite Financial. Todd, we're really excited to have you. Marc, thanks for coming back on RealEDGE to dive into today's hot topics in our industry.
Absolutely. Todd, great to have you.
Yeah, appreciate the invite, guys. Good to see you.
Of course. Todd, one of the things that you guys are known for is being really dialed in, really specific on how you look at the market, how you look at your key customers, who your key customers are, and then how you approach bringing them those deals and bringing them the financing that they need. So we're hoping to dive into all that today. Thank you very much for joining us.
Yeah, excited to have this conversation. So appreciate you guys having me on.
Tell us a little bit about how you approach consumer direct at Flite. What is it that you brought to the table, and how do you run that? How do you run that business? How are you thinking about it today?
Yeah, so I've been in the consumer direct space for, I guess this is, my 24th year heading into. So, we've always kind of taken the approach, even in previous models, and as I've learned and kind of gotten a chance to step into leadership roles, having been in LO for, over a decade, the type of consumer direct model that we found was best suited for what we, for long-term, success, if you will, was just not trying to be everything to everybody. We have this saying, like, let's be something to somebody, not everything to everybody. And so, that's really been the approach since we've joined Flite and opened their consumer direct division, almost 9 years ago with a really small group. Was let's really start to understand, like, who do we serve best, and then let's build our business around that customer, and then let the process flows, the people, the sales training, the entire front and back end of the process all kind of just get tighter and tighter and tighter, and ultimately just continue to try to improve the consumer experience, but also the employee experience, because I think those two go hand in hand. And that's really been, that's what we do. We really focus on debt consolidation, cash out types of transactions, helping people think differently about how to restructure their debt. And we've always viewed that as purchases will always be there. Debt will always be there. And, we've been in a market for a long time where there's been equity and debt. And, I think it's one of the reasons why, although it's, been challenging the last 3 years, we still are 95% refinance, about 5% home equity. And it's just because we're not out here trying to get everybody a better rate or just a better mortgage, per se. It's really looking more holistically at their entire debt picture and realizing, like, hey man, there's millions of people that have a cash flow problem. And if we can get really good at helping educate them on how they can restructure things in a smart way, it can make a ton of sense, and we can be very effective. And that's just been the approach. That continues to be the approach. And it's just constant, refinement, week after week.
It's also creates sustainability, though. I mean, think about it. So it's kind of like the model from the Silk standpoint, especially when you get on the consumer direct or national. Purchase becomes a challenge, right? At the end of the day, it's now, I think it will get less challenge as technology has evolved, as, certain things are happening. But I mean, let's be honest. Refis don't go to zero. Divorces don't go to zero. These things are continually always happening. It's the players change when the markets change, right? Because you got people who got fat and happy off of just a rate term refi during COVID. But the strategy and the performance of companies like a Flite and what Todd's done, and like a Silk, is, okay, we know it doesn't go to a net zero. It's how do you build your mousetrap to sustain the down cycle, right? And how do you build the right sales team, the right operational team, and the right culture with layered on with technology and other things to say, okay, it's a cost-effective model so that you can take, in times like the last 3.5 years, survive, and I say survival in the last 3.5 years has been, if you've broken even, you've done a really good job, right? Like if you've made a little bit of scratch, you've done an outstanding job. If you lost money, well, you didn't do as good of a job, right? But the reality of it is that as the market turns, it's always it's not a feast or famine business, as a lot of people say. It's about a survival of the fittest, in my opinion. And the fittest has to be who's got some of the best teams out there, right? And who's got some of the best training out there, and who understands. And Todd, you said something very, very important, which is rate's important, but it's not what's driving your consumer's decision making, right? Because when you look at the blended rate, when you look at what's happening and saying, okay, right? I used to say when I was as the LO, and this goes back to my AmeriQuest days, which is, do you write your interest rate on your check when you're doing that, or do you write a dollar amount, and is that dollar amount less because you've actually been able to pay off other debt that drags you down? Like, you don't go to your neighbor and say, hey, I got a 3.25, but I can't pay my bills. Your neighbor sees you can or can't do stuff, right? So same thing that happened on the silk side. We were during COVID, instead of just getting that money and getting fat and happy, we doubled down on technology so that we didn't have to have as many people for a down cycle. So we had cost savings, but then we were also able to take more efficiencies. And I believe, and Todd, I want to get your opinion on this, speed's becoming very important. It's not just about rate and cost. Speed's becoming important because of the consumer debt load in this side of it, and getting that borrower what they need at a timely fashion to be able to fulfill what they're looking to do, right? And having the transparency comes into play too, so that the LO can educate the borrower what's happening with their loan, right? It's a very big piece of it right now, so that the borrower feels like they're in the know of what's happening. Because again, they want to skip those payments from the credit cards. They want to have that payment break on their mortgage. They want to have that cash in hand, because that gives them the relief that they've worked so hard for, of having that house with the equity. Like, people got to start, in my opinion, talking about, having a home is a great thing. Having a home with equity is even a better thing, right? Like, so owning a home is one thing. Owning a home with equity is a really powerful thing. But Todd, I don't want to put words in your mouth, but I think we come from that same camp, which is being a national company it's great. Yes, during low rate times, but during the last 3.5 years, it's also great because you know where you're going after, and you know who you can help, and you're still helping people, right? Even if you're taking somebody from a 3.5 to a 6, but there's benefit, and it's true tangible benefit. You're not writing your check or hitting the wire on 3.5. You're hitting the wire on, oh, my overall payments, I saved $1,500. But I don't want to put words in your mouth, Todd, but by the smile, I think you and I are on the same page.
I mean, I agree with everything you just said, and it's, these markets are necessary. You can't have just the gravy train year after year with a lot of equity, a lot of debt, super low rates. Like, that creates weak loan officers. And, I think when you get into markets like this, they're painful, and, they're unfortunate that some companies and business models don't survive. But you do get down to the point where the kind of like the survival of the fittest, like, you've got to get back to the basics of just blocking and tackling and talking about the right solutions. And, I think that's what we've seen. And we came out of we train a lot of our LOs from the ground up. And a lot of them had only experienced low rates, a lot of equity, fish are jumping in the boat. We've always trained a specific way, and, but it's easy to create bad habits in those markets. And so, we've looked at this as the combination of rapidly rising rates, which is, another problem on top of just higher rates. It's just how fast it happened. And then the margin compression piece on top of it. I get it. I mean, we've had moments and months where, close the same number of loans, you're making a lot less money. And then how you keep investing and trying to improve the model while you feel like others are kind of slowing down or hitting the pause button. That's been at least our approach the last, 3+ years. So, but technology is a huge piece of it. We worked with you guys, and, and we've got a lot of things that we're talking about, but it's about efficiency. Our customer, especially, they want the money, once we present the value and we're all on the same page, they want to close yesterday, and, like, our average deal is saving a couple $100 a month, getting 30 grand in cash and another 40,000 in consolidation. That's the average deal. So it's a game changer for their complete financial picture. And once they see it and realize how close they are to recreating that reality, speed becomes a huge factor and a frictionless process. So we spend so much time just trying to take the friction out of the experience. And a lot of the times, it's, I see companies really focus on just the consumer. And that's ultimately the most important. But I think you've got to make it, you start with, your people, and you've got to simplify what they do in order to stay organized, not miss things, automate the right things, keep the human touch when necessary, and throughout the process, finding that balance. So yeah, we're just constantly trying to find, even with our partners, with our internal tech teams, making the whole flow just be able to go faster and smoother for the customer. And it's also no mystery in the consumer direct space, it's highly competitive. So when we get a borrower that's on board and wants to move forward, the faster we can get it through into the finish line and keep them really happy with that process and engaged, you're just gonna have less fallout, on top of that. So it comes full circle. Speed is critical. Also making
But you
sure you're doing it
You
right.
said something that's interesting though too, and this is that old Richard Branson statement, right? Which is what, take care of your people and take care of your client. A lot of companies just focus on the borrower in these scenarios, and it's like, yes, you need to, but if you have the right culture, the right business process, the right technology, they're going to take care of your borrower and consumer at a much better level, because it's not a confusion juggernaut of a process, right? And in my opinion, especially in this space that Todd, you and I play in, the less hands in the cookie jar, the better off that process and communication becomes. And in order to do that, you gotta put technology in place that, you see some of these companies who've got, and I'll just use the title side of it. Hey, I got a person who opens title. I got a person who reviews title. I got a person who does this. And it's like, okay, now you just have three people that are educated in only a small piece of the process. And now that scenario puts how many emails and communication back and forth and back and forth. Now all of a sudden, what could have been solved for in 30 minutes took 3 days, right?
Yeah.
And that slows it down, and that increases the cost, especially in the marginalization side of it. Well, all of a sudden now you have to be outpriced compared to your competitor in order to make that thing work. And then speed becomes an issue. And if your competitor is speedier, that same borrower isn't just staying with you. They've got two other mortgage companies potentially working on the same thing, and they're waiting to see who can get it to the closing fastest, right? Because like you said earlier, it's all about them getting their money in their account yesterday.
Yeah. Yeah. It's you're hitting the nail on the head. I mean, it's you I'm out of the ICE conference, and I just got a chance. We work with Dale Vermillion a lot
Yeah.
on this consulting stuff. And he's got this phrase he said to me many times, like, you're trying to perfect the assembly line, because there are some handoffs needed. And we do have that, but we're always trying to limit the handoffs, and then you got to make the handoffs from one individual involved in the process to another frictionless. We found this balance of some specialty roles, like, Susan on our title side, things like that, where we've been able to, through trial and error, really make it as seamless as possible. And keep the front end and the back end and everything in between moving at a consistent pace every day is a challenge. And I think it's something that not just consumer direct lenders face, but everybody's trying to figure out kind of their version of that assembly line. And I think sometimes there are things done on the front end that can absolutely yield a better customer experience. But if they require more work on the back end, and they create more friction and uncertainty there, it ends up working against you, and the consumer experience suffers. So we've been we have definitely made some moves and decisions and rolled them back, because that was the experience we've seen. And but it's become more of a principle now, and helped us really think better and more intelligently about how
Yeah.
we implement workflows.
Yeah, and Dale said it best. I'll never forget that when I first got to AmeriQuest as an LO, I popped this video in. That was our training. Is 7 Dale Vermillion takes price is what you pay, value is what you get, right? And price has to be competitive, but it's not the only thing in this type of business that you need to focus on. What is the value, and how do you create that value? And I think the way the world is changing today, value definitely boils down to communication, right? Better quality loan officers that got great communication because they got information at their fingertips allows for that great communication, and it actually speeds up the process. And not only does it speed up the process, but it gives the consumer confidence of who they're going with, right? And one of the struggles I've seen, especially on the closing and settlement side, is when the LO doesn't have the information to be able to relay it to their borrower and then hit the milestones and timelines that they said they were going to, that loses the confidence and that loses your value prop, right? And when you only go after the rate, now all of a sudden, if that's your value prop in a market like it is today, especially because technology drives rate tables, drives a consumer being able to go on the internet, right? Rate was one thing back in the day, but if that's your only value prop, somebody's going to do it for less, right? There will always be, and I say it with title too, you can't drive my fees to nothing. We're one of the lower cost title companies, but there's only so much more I can go because my value gets disintegrated and I can't have that technology and the process if I go too low. And then you're never going to stop that game of price, right? Like, and in the world, Todd, you and I are living in, $75 or $100 a file is not like that borrower who just got $70,000 out, $30,000 in debt and $40,000 in cash. That's not driving their decision making. That decision was made by the LO, not the borrower, right? And that LO is the one making the decision. Oh, the $100 title fees are $150. Well, you got to look what that value is. Is the value I can get that borrower closed 3 days faster because of the technology and everything else? And is really that making the difference? The answer is no. That $150 isn't making the difference. It's pennies on the dollar. It's really about creating that experience through value. And really that value has to be that borrower is in the know of their transaction, not necessarily every day, but it's got to be as close to every day because that borrower is anticipating from application to close. They're not waiting 30 to 45 days. They want to be closed as fast as possible because if you take that application on March 2nd, they don't want to have to make their April 1st payment. Right.
Exactly.
So they want to know, okay, hey, I'm paying my debt load off this month and I get to skip the April's payment and even more money for me to do what we want to do. And I think one of the things our industry's got to get behind is it's not just about price and rate, right? And I get where, Fannie, Freddie, and everybody want to go with, okay, got to lower the cost. We got to talk about where the cost is actually increasing. And it's not sitting in title overall. It's sitting in some of these monopolies that are driving up the price of technology, some of the things that are out there, right? Like, and I'm not going to call names out of those who we know are doing it, but it's not certain aspects of it. Todd, it's not you guys driving up the price. It's everything you have to pay in order to get the manufacturing process done, right? And I think we got to start looking at it as an industry saying, why is price going up? What are the true areas of price going up? And then what is the risk? And without certain things, does that risk become even greater? And if that risk becomes so great that forces the price to go up, like I look at the title waiver at Fannie, is that really realistic in every scenario? I can't imagine Top Flight going with the borrower that you're going after going, yeah, we don't want title insurance and we're going to take all that risk on, right? That borrower is going to have a judgment or lien. And are you going to take on that risk of that foreclosure happening potentially because you just got an abstract and there's nothing else being done? You did an abstract and close? The answer is no. That title waiver will only be effective potentially in certain areas. But if that title waiver makes the lender buy back that loan because it didn't have the right due diligence done behind it, all of a sudden you took what you thought was a lower cost model and now you're going to increase the cost because if we think that Fannie and Freddie are going to eat that cost, we're all sadly mistaken.
Yeah. No, you're accurate for sure. Like credit, let's get that down.
Yes.
There's some, I can call some people out, right? There's a lot of expense, man. And, I just was at a dinner last night and we were talking and it's like, because it is true. And, some have figured out, some more economical ways. We try to go, we'll spend a little more if it's truly going to make a meaningful difference in the experience for the consumer and the employee. Like we won't just go like with the cheapest tech provider because we can save money. And I think that's a mistake. And it honestly, I think is one of the challenges right now, because when you go through like all the potential as a lender and you're trying to build your tech stack, I mean, you can get into the 30 to 40 different types of categories of vendors that can all have their own price tag, attached to whatever that solution is that's going to affect your model and your business. And And the problem is when they go to consolidate, um, not mentioning any names, but then the tech in certain areas gets weaker. And so you end up in a spot where it's like, I'd love to work with just you and have these 4 solutions in one and save a bunch of money. But man, you're getting lapped over here by XYZ company who all they do is that, and we're just way better at it. And that's where we find ourselves right now, is in that mode where you're like, gosh, I could save a bunch of money with, this particular, and have the same tools, if you will, or the same, attack the same needs, but it's going to be a far inferior overall experience for my people and our customers in the
And
end.
they've got you, right? So it may be cheaper today, but
Yeah.
it may not be cheaper a year from now when they say, okay, this is how we got you to do business with us. And then all of a sudden that contract expires after a year. And now you quadrupled the price of that because now they're like, oh, well, it'll be too hard for you to pull those 4 layers out of your tech stack. And if you do, what pain does that give, especially during a time like right now where rates are going down, business is going back up? I always say this in companies, right? Like there's never an optimal time to deploy tech. When business is low, you don't have the resources to deploy tech. And when business is great, you don't have the time to deploy tech, right? So there's always a fine line behind when and how you're doing it and who you're doing it with.
Yeah. Well, and you touched on it earlier, we're in one of those points in time where, tech is scaring a lot of people too, so I think your point you made earlier, like our message to our team is, look, we want to take advantage of more technology so that not so we can replace you, so we don't have to hire more of you. We want to give you the ability
Right.
to do more, and hey, there will be roles that are going to get so streamlined and automated that are in all of our models and businesses today that are, those folks, and at least in our company, our view is how can we give you additional or new responsibilities, not how do we use the tech, to replace you. And the savings is going to come as we scale, and, this processor can close 40 loans instead of 15 or 20, so.
It's actually job security, where people look at it as job replacement, and it's actually
Right.
job security because if like I look at the down cycle right now, right? Like, and you say, okay, well, if you have this job and you weathered the down cycle, well, that just means that, hey, you weathered it, but now you've got opportunity, right? Like, which is your job security just got way better because I don't have to decide between you and another person now, right? Now I'm saying, okay, you're my guy, you're my girl, and you're there because you did such a great job. Now they always cycles, well, now you want me to do more, right? And what does that mean? And the reality is that's the world we're living in right now is, yes, because of certain things and because of technology, you get that job security if you're really good at your job. And yes, we do want you to do more because the technology freed your time up by 25%. And yes, we want you to maximize that 25% since you are working and you're employed. We do want you to do that. And that's the narrative, right? And if you've got great teams with great people, the one thing that the cycles do is it allows you to get the best of the best if done right. And it allows you to build the culture with the best of the best. And those people do understand that, right, Todd? They do understand, hey, I am one of the best of the best. And yes, wow, they implemented this and it gave me 3 hours of my day back, right? The great people don't go and go, well, now I can go walk my dog for 3 hours and I don't have to work. The great people go, okay, I want to continue my job security. And how do we do that? Well, you do it because you could do more. And yes, that more didn't come at it more hours. It came at you freeing up those 3 hours for you to be able to do more in your 8-hour day, right?
Yeah.
And in turn, that more became more business for our company, gave us more for the opportunity and for us to be able to be more successful and beat out our competitors. And that's where the industry's got to get that narrative, which is this tech stuff and everything else isn't replacing people. It's actually just not allowing us to have to go get more people. And it actually gives you a better job security and helps the company out. And I think a lot of what the narrative in the industry is missing that, right? We're missing the why behind a lot of things and the explanation behind things. And everyone pivots to that conversation, which is, well, the tariffs, the this and all this is going to get rid of people. No, what we're really doing right now is right sizing the economy. It's a course correction. And yes, sometimes a course correction is painful, but it doesn't mean that it's the wrong thing. Because if you look at 4 years ago, part of the wrong thing was people having jobs that we didn't really need those jobs and spending money that we didn't really need to spend, right? And I'm not getting into politics here. Notice how I didn't tell you if I'm a Democrat or a Republican. This is just about business, right? And I think people got to stop looking at it from a political view and start looking at this from an actual view of, hey, if you were running a business, how would you run that business? And there's no difference between the federal government and the private sector of how do you run that so that you could be profitable and successful. And I think that's where the narrative needs to start looking at, especially in our industry, which is, hey, during COVID, everybody threw bodies at it. Well, that really didn't go well for the companies that only threw bodies at it. The companies that had some bodies be put at it, but really focused on their business process and technology, they're the ones doing really well right now. And when I say really well, again, breaking even, not losing money, and now seizing on that opportunity to grow again, but not grow with adding a tremendous amount of people, right? And I think that goes back into this technology play. And, Todd, I'll say it, like, we came together. I mean, I know Ryan was my EVP of sales and marketing. He was, soliciting you for 2 years. And then the timing just became right that we had the opportunity. And even that, and I'll be clear, and Todd, we could talk through that, which is, it wasn't easy go. There was things I messed up on, the company messed up on, and we had to figure it out. So I think it's also important to be real with people that even in these scenarios, you and I had to have that sit down in Lending Tree and say, hey, I apologize for my way of handling it. You kind of said, no, I got to do things better a little bit on my side. It was a true partnership. It wasn't like, oh, you just screwed up or I just screwed up. It was like, okay, because we're deploying technology and a little bit things that are different than your team was used to, we had to work through that. And we both had to kind of fall on our swords of, hey, new relationship and new implementation of things, and how do we do it, right? And I think people miss that too. And in our industry, there's a lot of smoke and mirrors that go on as opposed to a lot of people being real. And I say that in this conversation with technology because technology doesn't replace relationships, and it doesn't replace being real, right? It makes things better if implemented and deployed properly, but it doesn't replace the human aspect that's still needed in a loan manufacturing process.
Yeah. The whole high tech, high touch concept, I think, is what, we're all after. But, I've been doing this long enough where if you're looking for something, you're just going to, click a few buttons and deploy it and it's all going to work great. That just doesn't exist. Like, the reality is you're going to have to get in the weeds. I'm in the business all day, every day. I enjoy that. I don't want to step out of that, but it does help us be more aware of where the friction's at, and just get it fixed, because it takes work, and we had that, like you said, we had that conversation, and now on the other side of that, look how much tighter things have gotten and where it's went. So I think you got to expect those things, not be shocked by them. I think, focusing on the controllables is huge. Having the right people. I had a dinner the other night, and one of the questions was around, curiosity around like our culture. And I said, look, man, we have culture problems. We have to be very intentional about trying to address them in a very honest and transparent way. And we have people problems like everybody else. We have all those things, but we're just super intentional about building a culture first type of team.
And listen, the administration change has created cultural problems, right? Like, we've seen some of that too because of people's beliefs and strong beliefs, right? And that's okay. But Todd, you just said something that's very important. You don't have to always agree, but being intentional and getting it out there so that, yes, you could be on both sides of the aisle here, but you got to figure out how to come together. Because if I had everybody who was a Republican in my organization, that would be a problem. If I had everybody who was a Democrat, I'd be a problem. And you got to figure out how you mesh those together. But most importantly, is you got to talk about that, excuse me, in an honest format. A lot of companies don't like doing that because it creates friction. Friction creates change, and friction creates good working people, right? And I look at it and say, people go, well, Marc, why are you okay with that? I'm okay with it because it's better than everybody sitting behind a door not wanting to talk, right? Like, if you build that in the right way, you could be passionate, you could be aggressive, and together you could come up with the right decision making behind it. But it's also about respectfulness, right? Like, I look at a lot of things right now, and you look at what's going out there on LinkedIn and everything else, and it's like, I wish people would take some time to think about things, right? Before you actually go out and write what's out there, think about it. Think about, don't make it a political thought, make it a business thought. Like we're, in this industry, we're all in business. Start thinking about it from a business standpoint and going, okay, would I run my business like this? And would I be able to take those losses on a monthly basis and survive, right? And you gotta, those companies, in my opinion, that are doing that and not making it a political thing and making it more about how do you do this from a cultural standpoint? How do you take people who disagree and getting them into an understanding of how to collaborate and take that disagreement and utilize that to channel it to work together, because your borrowers are going to think differently. You're not going to have every borrower be the same and everything else. So, understand, I call it conflict resolution, and being able to have that conflict resolution is important by being real with each other. When people aren't real and people are dancing, it never solves the conflict. It only makes it worse, to be honest with you, because then you walk off each and you go, well, we didn't solve anything. He's an asshole. She's an asshole. And everyone walks away going, well, now we have more hate than we have anything coming together. And that, when you deploy technology, that's also another big piece of it, right? Because nothing works the way you thought it was going to out the gate. Somebody always in every organization will have something to say about it, and you got to figure out the whys behind it, and then how do you course correct it? And Todd, I'll be the first to tell you, doing that with you guys was eye-opening to me too. Like, here we thought, we got to figure it out. And then I was like, no, we didn't. Like, we're like, okay, we thought, okay, we could just deploy it this way. And then we had this aha moment, which is, okay, we could probably deploy it this way, but there's still other things that have to be looked at in a different business model than some of the others that we're used to. And, I can say from my seat, I was so happy to have somebody like you on the other side who kind of course corrected me through all of that. And honestly, and Jeremy, I'll say this because I don't work with a ton of partners that always act like this. Todd was so thoughtful through it. And there was times I was like, man, he could have come at me a lot harder when things weren't working out. And he didn't. It was more of like, hey, I've been through this and, I see where you're coming from, but can you help me out with this? I know we need it, but we got to do it in a more methodical rollout than how you're used to doing. And that taught me a lot that, at the end of the day, we saw that. And honestly, Todd, after you and I had that conversation back in early fall, Ryan and I sat down and said, hey, we got to approach new prospects a little bit differently. Not, hey, this is the one path you go down. We got to say, okay, yes, our technology allows this, but we got to implement it and deploy it differently than we used to, right? Because during COVID, the rinse, wash, repeat was pretty simple. Rate, term, refi, one path, one way of doing things. And I want to say, as we're coming up on the hour here, I really appreciate you and how you did it, right? And we're still growing it with you. And I love the competitive factor behind it. I love the fact that yes, there's other title companies you guys utilize, and that is a champion challenge that makes everyone better, right? And it's not only just a survival of the fit, it's the best coming to the top, right? And sometimes trying to get to the best, you got to know where your weaknesses are. You got to understand, hey, you could have the best technology, but maybe you didn't implement it and deploy it the best way. And you got to take that into account. And I think that's what I went through with you guys, which is I do think we have one of the top technologies out there, but we didn't realize how to deploy it as well the first time that we did the second time. And I hope you see that too. But, I've never really thanked you for it. And I figured this is a great opportunity to thank you publicly for it, because there's not a lot of people out there that do it like you did. And man, I really appreciate how you approached it, more so than I've seen in this industry in a long time.
Oh, I appreciate that, man. No, I feel the same way. It was, I mean, I've been in the mortgage game for a long time, and I've earned, I've been through, you just get battle tested when you've been doing this a long time. You've seen it, you've built companies, you just expect there to be challenges and things to work through. And I get more nervous when things are going really good, like with nothing like to, get involved with to try to improve. And so yeah, man, we appreciate the partnership, with you guys. It's been great dealing with you directly. It's another situation where you're actually like me, you're in the business. And that's when I see a lot of the problems in the industry, it tends to be the people that were at one point probably really driving the vision that took it to the point to get it and make it successful. then they step aside, and then it's like, and that's something like I don't have a desire to do. I don't want to, hire another me and go play golf all day. I'm not wired that way. Like I enjoy this. And I think for our team, it's like, I don't love when I've got to deliver, or address a scenario culturally that I don't, that isn't, you know, um, something we
Great.
spend a lot of time promoting, but it's like, I think over the years, and, I've learned a lot as a leader, just feedback, being open-minded to take feedback from our partners and from our people. And I don't care if you're the brand new LO or MC, maybe get in and close a few loans before you start making suggestions on how to change the business model. But I am genuinely interested, and I view it as a competitive advantage to an extent. Like we have a real environment with people actually doing the job. I need to understand their job, and then I need to listen to what they need to try to make their job easier, knowing that that's going to benefit me, that's going to benefit the customer, and that's really been what we continuously, try to do, and building a culture that way is a challenge. I think it's much harder to do if you're trying to be gigantic. Like I do feel for these guys that have thousands of employees. No thanks. Like I want to know my people. I feel like if we got, 5 times the size we are now, I would not be able to keep, it at the level it's at culturally. I think it would be almost
Well, it's that. And then there is a law of diminishing returns at times. Like everybody, like I say to people, like at the end of the day, as a business, it's about profitability. It's about that side of it. So just because I do an extra 500 loans in a given month doesn't mean they're 500 are profitable loans. Sometimes there comes a point where there is a law of diminishing returns and it could have a negative impact on culture. And that also looks at the type of client you have. Like for us, it's a little bit different than you guys because your borrower is your client. For us, it's like, okay, I got to be very cognizant of, does that mortgage company fit into our model? And it doesn't make them a bad mortgage company. It just means we're not going to have success. And what operational capacity do we eat up by having the wrong partner? Right. And I think a lot of times people struggle with the FOMO of fearing missing out, or what revenue am I giving up? And it's not that their company's bad. It's just not a good revenue stream for us. And does that work? Right. And I think you said it, like you don't have to always be biggest, doesn't always mean best, right? And biggest could mean, yes, you think that there's a lot of revenue coming in. And don't get me wrong, we all want to be successful and beat last year, or continue to grow. But I think a lot of companies don't understand 100% what growth is, right? Growth and losing money is not always in the best scenario. Now, sometimes you gotta drive business decisions and double down and put money into something, and you lose a little bit of money to do that in order to get to the next level of growth. But I think you would agree sustainableness is more important than always growth. And in our industry, it's also important to sustain yourself in tough times where, there are companies that go out there, get too big during easy times, and then lose their skis because they don't know what to do when that market changed. And you saw that big time when the market fluctuated as fast as it did with the rate rise after COVID, and how companies weren't able to do it because they did get way too large during that time. And I think people like us to sit there and go, okay, yes, we want to grow. We always want to get better, and we always want to do a little bit more. But when does it become a bad scenario to do too much more in a given year, right? And how do you do it from an experience standpoint? And you got to be careful of not, if you're founding your company on experience and everything else, you need to make sure you're continuing to fulfill that experience and not get too big that you can't fulfill your real core competency.
100%. Yeah, with that being smaller, we're the being agile, and being able to, and having a culture of people that changing something and embracing change, and it's easier to, implement new ideas, new tech. We've been fortunate over the years where we've just not let our foot off the gas with innovation, and a lot of it's come from the staff and different things that we've, tested and worked, some that didn't, but we built almost like an understanding. It's baked into our culture where, hey, I can't promise you everything we're going to try or invest in is going to be a home run, or that it's even going to work. All I'm saying is our vision for growth and how we become the best is we do have to continue to refine this thing and test things. And that's partnerships, that's technology, that's marketing tactics, that's all the things. And ultimately, I had this question the other day. It was, like, why do you do what you do? And it's like, well, I don't run it we both have businesses to run. We have P&Ls. We have to run profitable businesses, but you can run a company based on profit and focus on that. And I know many that do that well, and they're very well off. But if you run it just on profit, you're going to sacrifice the culture. And that's where I think our people, we don't make anybody sign a non-compete. We're looking for volunteers, not hostages. Like, you want to work here, great. If you don't, go. We're going to try to be, and we're confident enough in the value proposition we provide for the loan officer, the salesperson, and the operations people, where it's like, look, we need to be able to provide the best opportunity for you to have you here. And we take that very, very seriously, now, the flip side of that is you can spend money, and you've probably experienced this, where especially during the height of margin compression, we were closing loans we were losing some money on, just because the question came down to, okay, this has happened fast. We've got, people are getting nervous. We've got to get a lot of our sales team back to the basics because they've gotten kind of, complacent and lazy with the approach. And this is going to be a process, but I got to keep these people getting paid.
Right.
And we got to get loans closed, but if you're with a big company, or a company that's just focused on the P&L, you're not going to see that. They were killing loans and, stopping locks and things like that. So I just think, to your point, man, you got to figure out what type of business that you have and you want to run and how you want to run it. And then I think it's really important, if you cast that vision to your people, in an honest and transparent way, you'll retain the right folks.
Yeah.
And the
You're
people
in
that
the
weren't meant to be
camp.
there are going to be gone.
Same camp, dude. Non-competes to me don't even need to exist at the end of the day. Like just be good at what you do, right? And if you're not good at what you do, then you got to figure out the why behind it. If you're holding somebody hostage for no reason, what did you really do? And then guess what? Those people don't work as hard anyway. They try and figure it out to do just enough, right? But they're not really in it to win it. They're in it to not have an issue, right, or have a lawsuit or whatever, right? And you see that, like you see some of what's in this industry. And it's like, guys, how much money and time did you spend fighting something that really wasn't worth it, right? Like, and I get it because everybody competed on, the signing bonuses. Well. What did you think you were?
It wears off, and
Right.
at the end of the day, there are certain businesses and models that they're the right fit for certain people and not for others. And, I think I couldn't imagine a scenario where I've got people in my office that want to leave and they feel like they can't. I think if you care about your culture, you don't want that on your sales floor and your operation. And so, yeah, we just tell our people that it's like, look, we pay attention. If we ever lose someone, and we have, we're not mad at them. We're literally taking a step back and be like, wow, like, okay, well,
How did that
where did they
happen?
go and why?
And what could we have done better to retain them, right? Like at the end of the day, what could we? And then there's some times too where, Todd, you have the same type of model of us. We bring in a younger group, train them up, and we also know sometimes we don't have the position for them, and they're going to go somewhere else. Not even a competitor. They're just going somewhere else because they got a skill set with us that could be transferable to another industry. And listen, I have a lot of like a Bill Belichick's playbook, right? At the end of the day, I have caps on certain things that I'm willing to do because I don't look at the P&L bottom line every single month, right? If I never operate my business off of that, like in going, oh, well, I'm at 20% in gross revenue and blah, blah, blah. No, I look at it though. I look at profitability and say, am I losing money, right? And there are times where you say, okay, that loss makes sense. But other times I'm not sitting here going, oh my God, what did I put in my own personal checkbook this month? No, if I'm building a business because guess what? In the great times, your marginalization is even better, right? Because you and I are coming from a volume-based business. In order to do a volume-based business, you can't always just focus on that one month. You got to focus on, okay, well, if I get another 1,000 closings in a given month, but I only had to add 10 people as opposed to my competitor who had to add 100, well, now all of a sudden my marginalization just got way better. And then during the tough times, I didn't have to go fire and have a cultural impact of 75% of my staff, right? And that is important when you're looking at these types of things.
Very.
Yeah, Jeremy, we've commandeered your time.
You guys are having a great conversation. What are you talking about? That's it, man. Todd joined us for a conversation with you, and it's been fantastic. I mean, I think, Todd, you mentioned the balance you have to strike. it's all about managing expectations of technology, culture, people, process. All the things you talked about are exactly the things that, you know, companies struggle with that you've learned and refined. So Marc, yeah, Todd, thank you. You know, we know, Todd, how valuable your time is, and I think you've been really generous to have this conversation with Marc and with us, and share that, especially while you're on the road. So thank you for that.
Yeah, thank you guys. I enjoyed the conversation, man, and appreciate the partnership with you guys very much. So thank you.
Todd, I really thank everything for you, and especially even helping me learn how to be a little bit more open-minded when it comes to things. And I really do. I can't thank you enough for that conversation back in October. And you know, I think it was as much as success we probably both had. It's so important to sit there and say, what could I have done better, and really look at that and say, you know, that's a great approach to certain things, and realizing that, you know, tough times puts different stresses on people too, right? And you sit there and go, okay, like, you know, you've seen it too. You're trying to make your salesperson happy. You're trying to make this person happy. You're trying to make this person. And it's like, okay, like, all right, I got to take a step backwards for a minute and opine to myself and say, okay, was this really the path I was originally going down? And, you know, and I don't even call it falling your sword. It's just being about being real. Like falling on the sword sometimes it's like, okay, well, you intentionally did something just to maintain the relationship. And to me, it's no, I intentionally did something so I could learn from it to better both partners and both teams, and then grow as an individual and grow as a company. And I think a lot of times in our world and in our industry, a lot of people are just in it for the now and the revenue cycle of it. And to me, this is about reputation. It's about how people enjoy working with you. Are you common sense? Are you have the ability to see things differently? Do you have the ability to adapt to a different way of doing things? And then do you have the ability to make a judgment that this is the right partnership or not? And when it's not the right partnership, do you have the fortitude to pick up the phone instead of ending in a bad way and saying, hey, you know what? It may or may not work out, or hey, you know what, we're probably not the right fit, and here's why. Right? You don't have to end a relationship in a bad way. You can end a relationship in a very good way and still have a great reputation. Right? Thankfully, we didn't have to do that with you guys. Like, and I'm appreciative for that. But you know, I learned a lot from you, and I did want to end it by again thanking you from it. And you know, it's always tough when you know, as much as I say I don't have an ego at times, we all do, right? And you sit back and say, okay, did that kind of give you a little bit of a punch? But you know, sometimes those punches are a good thing. And you know, again, I just really thank you for your approach, your honesty, and you know, even the conversations. And I know how hard it is as being busy and even focusing on, you know, building your team. So I really appreciate your time today, and I appreciate all the insight you've given me over the few months. And to the world, it's not like Todd and I have conversations every day, but when we do, I find them to be very meaningful.
Yeah, I do too, man. I appreciate you very much. So this was fun.
It was fun.
Thank
Have
you,
fun
Todd.
at Ice, bro. I'll talk to you soon.
All right, guys.
Continued
See you.
success.
Thanks.
Thanks,
Thanks,
guys.